There's nothing wrong with having an expectation and analysis. Like before you sit down and go to bed, you look at the charts and you think, okay, well, this looks like it may do this or that. So you're predicting, you're doing your analysis, you're looking for a setup or a condition in the marketplace. If it meets that condition, then you'll assume a trade position, okay, or incur risk. When I stated on Wednesday that I was neutral, that means that I have no interest in taking a trade. And even if I didn't say that, let's just take that out of the expression and say that it was you, or I'll just stay on the hot seat. ICT said that he wanted to see Eurodollar go lower. Okay, take out the truth and the fact that I said I wasn't doing anything with it. If I'm stating that I want to see the Eurodollar or any market to set up a situation where we can be going short on it. If the market doesn't present the conditions for that short to manifest itself, there is no reason to be upset. There's no reason to point fingers and say, ha ha, you got it wrong, or me, ha ha, ICT got it wrong. Getting it wrong would be getting into a trade that would be a failure and stopped, and with a loss. Okay, there is no setup in here that gives the expectation with time. So that means the time of the day that we would be taking a trade, which would be what? Eurodollar could be traded in the London Open. It could be traded in the New York Open and or London Close. There it is. That's the times I'd be interested in even conferring with Eurodollar. We had these relative equal lows here that I was trying to aim for. Did this market show any displacement lower after Wednesday's commentary? Did it displace lower, create a fair value gap to trade back up into, and then go short for that? Be honest now. Did it form? No. The only thing it did was roll right up out of that, came back down, found some support inside of this imbalance, which I'm sleeping at the time. I'm not watching it. And it rallies up, attacks this high. Mean threshold of the 60-minute fair value gap over here. It consolidates around that, then expands up and attacks the buy side here. So, profitable in the sense that there was no monetary loss, but wrong. Wrong in expectation, and no ego bruise, no pride harmed, because there was no setup that failed. No setup manifested itself. So, that's what generally the skeptics do outside of our community. They'll point fingers and say, ICT said this and it didn't do that. Hoping, because in your ignorance and very limited understanding of what it is that I'm teaching, you'll see that and say, oh yeah, it doesn't work, or he doesn't know how to trade, or he can't read price, or he doesn't know how to do anything right. It's someone that is trying to capitalize on a viewing section of our audience that doesn't know enough to know better. Okay, so there is no setup in here that set up a displacement, trade back up into a fair value gap, and then run the liquidity here, and potentially over into this low. But I didn't call that low. I called this area of interest right below that low here. At the time on Wednesday's commentary, this little logo was just inside this area with the amount of data I had on the chart. Okay, so it didn't manifest any kind of losing trade. What we want to see form that gives us the framework for the trade has to be there in price. If it doesn't manifest or make itself present in price action, there's nothing to do. There was no losing trade. There was no missed opportunity for a short because it just simply didn't manifest. It went the other direction. No problem. You're going to have that. Okay, you're going to have that occur with you in your own analysis, your own trading, and you can sit around and beat yourself up and say, oh, I should have did this, I should have did that. Or you can say, okay, well, I'm glad that my system, my method, my conceptual ideas about how I'm reading and engaging price action kept me from taking a loss. Even though it didn't give me the opportunity I wanted to pursue and participate in, I was not able to incur a loss. And there's no ego harm there. There's no pride there. It's flexibility. You have to be flexible as an analyst. The market's going to do certain things sometimes that you just don't anticipate. And you're going to get that part of it wrong. But the beauty is of not fearing that. Because if you understand what I'm teaching you, my concepts, my setups, when they form, they're actionable. But if they're not presenting the framework, then chances are the likelihood of you having a loss is reduced. Whereas if you just go out there and trade on indicators, or if you trade on some willy-nilly idea or some black box idea where it just constantly keeps throwing ideas that it's a buy, it's a sell, it's, from my perspective, that's, complete randomness. And you're going to be more prone to being victimized through that randomness. Whereas we rely on price action to show us something to work with. And at the time at Wednesday analysis and commentary, we didn't see any displacement lower afterwards. So there's nothing to engage here. There's no short that failed. There's no short that manifested itself. So that way you understand the proper context. It's not me trying to save face and look smart and say, I got it wrong, so let me get up here and pretend to give you a narrative so you don't pay attention to it. No, I want you to pay attention to the fact that I called that to go lower into these levels. Because a gun to my head, I had to share my opinion. It's easy for someone to sit on the sideline and say, he says buy and sell, and when one works, he comes back and says, sometimes there isn't a very clear expectation from the time I'm sitting in front of the charts and talking to you. And I made that very plain when I said I was neutral. But gun to my head, that means I have to give you my opinion right then and there. I would prefer to see the market run these lows, this low, and maybe get into this area here. Okay, that's wonderful. But did it give us anything to act on? No. So there's no reason to be upset about it. There's no reason to point fingers and say the concepts don't work, or I can't trade, or it's a scam. Okay, it just means that you are learning how to navigate. Navigating price like this is what you're going to have to do. Every other system, every other educator, every other trader has these environments where they go and they expect to see something. They really want to see something form in price, and if it does, they will trade that. They're predicting price. But that setup might not manifest for them. And they either have to adapt in reverse or do nothing. Well, I was sleeping where all this was going on. So it had already ran up into this area here when I woke up. So Thursday, it was like, okay, well, there it is. I mean, it's already moved. I'm not ashamed of that. My focus was and has been on index futures. So a 15-minute time frame, you can see here. That gap on the hourly chart. Let me kick back up into it before we see that. That's this right here. Okay. That buy side imbalance, sell side inefficiency. It's a fair value gap. The market trades back down into here and into that shaded area, which is a fair value gap in itself. And we'll look at now the 15-minute time frame. You can see it trading down into it here. That's the London session. That's London open kill zone. So there's your trade. It's a Judas swing, and it rallies up. Admittedly, if I had saw this like this prior to London, I still wouldn't have traded because I'm not trying to trade Forex right now. But I would have anticipated a run into this area, and how we traded at the order block here. That would have been, in my mind, much more impactful. So we had a down close candle there. We rallied above it and traded down into that mean threshold of this down close candle that you're seeing here. That right there, that's a trade I would have taken. I would have taken that, but by the time I sat and looked at the charts, it already moved too much and I'm not interested. But we have an immediate rebalance there, and we have an immediate rebalance there. So when you see those are signatures that tell you that the market's going to want to quickly get to some level of liquidity or inefficiency. And the old high on the hourly chart was here, so it drove up into that rather handsomely.